Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 3rd of February. Starting off with the VACTA, where I know there's a lot of people who are in at maybe the wrong level, but here we've got the situation where after the island reversal that we had at the end of last month going into this month, we've actually got an island reversal to the upside, or an island floor reversal, let's say. And the gap higher today gives us encouragement that this time we will be able to break through the 50-day moving average and at least hit that line of resistance from back in June, around £1.13. Only an end-of-day close back below the floor of the gap at 84 pence really delays the upside scenario. And if you're fussy, what you'd like to see is basically an end-of-day close tomorrow above the top of the gap at 87. That would be a decent signal, and then give us more certainty on the move to £1.13, and obviously, hopefully a little bit higher than that as well. Moving on to, I suppose, what is the RNS of the day from Sizzle. Here the shares have, well, we're looking good anyway. I already spotted the bullish divergence there. That was the bullish divergence line which has been in place since December. Shares bounced off that. They also bounced off the floor of the falling wedge around 2.25 pence. And today we've broken a line of resistance, which was the main near-term one from back in November. So the level to remain above, let's say, is around 2.7 pence. So while there's no end-of-day close back below 2.7, we're looking to see what the upside here may be. I suppose the best case scenario would be a retest of the late November resistance around 4.4 pence. And that's sort of just below the 200-day moving average, which is still falling. But this divergence line does suggest that we're looking at quite a strong situation after the negative flow from 11 pence in the early part of the summer. And it's interesting also that the volume did actually spike up ahead of this particular announcement. So obviously somebody guessed right about what was to come for Sizzle. Moving along to a stock which is not quite so high profile, but maybe after this it might start to recover. Here we've got a bear trap gap reversal. So we had that low there in earlier this month at £1.19. 3 days with the price action at 118, and that's a narrow bear trap there, and then the gap higher. Decent signal, and above the the top of the gap now, £1.24. Looking for a return towards December resistance up towards £1.50. If you're looking for a tighter stop loss, maybe the neckline resistance there, 129, may be useful. As well, there's no end-of-day close back below that. Then we could see £1.50 or so over the next couple of weeks. Onto a stock which I interviewed last week, and a very interesting situation it is for Falcon Oil and Gas on the fundamental front. Here we've had a bounce for the shares above the 50-day moving average, basically testing the old resistance from September, October, the neckline resistance at 9.4 pence as new support, and bouncing well after that. View now is that hopefully we will see that retest of September resistance at 15 pence, maybe as soon as the end of this month. And obviously that's only while we remain above 9.5 pence. Stock which is new to the Bulletin Board Heroes, Gelion or Gelion, or however you pronounce it. Here we've just got a relatively new chart, so a new stock rather. Here we've broken a line of resistance from back in December. That was at £1.17. And above that, looking to the top of a broadening triangle from the end of last month as high as £1.75. So it really looks like something is going on here. Maybe the shares have managed to flush out whoever was selling them, and up we go at the moment. Initially up to the 150 area, which is the 50-day moving average. That should be relatively easy for the shares. On to Gene Drive, which has also given people a rather rocky ride in the recent past. The reason for including it today is actually not that we've got anything spectacular on the price chart, although we're very near now the 23 pence neckline resistance. I want to see end of day close above that so that we could get up to the 50-day moving average at 34 pence. But this bullish divergence line gives the impression that the shares are ready to have a little bit of a run, and even if it's up to the low 30s, I think it'd be quite a relief after the pullback that we've had from the 80 pence zone back in December. On to i3 Energy, which is serving up now a monthly dividend, which is quite a novelty. Covered the shares many times before, but here you can see that we've got this broadening triangle that's been in place since basically this time last year, looking for a proper clearance of the 15 to 16 pence area, and that will then hopefully give us the long-awaited and long-promised 28 to 30 pence target for i3 Energy. But at least the fundamentals seem to be matching the technicals at the moment there. Another stock which is maybe a bit off the radar, but is having its moment now, is Invinity Energy. Here we've had I suppose, well, there's two things here. We've got the bullish divergence line, so we had the lower low for the end of January, but an uptrend line in the RSI window, which is good. And also we've had a gap higher today, above the floor of the gap there at 65 pence, looking for hopefully another test of the 50-day moving average at 88 pence, maybe as soon as the end of this month. So that's a reasonable time frame for that scenario. On to Katoro, which has broken that line of resistance there from March. That's around the 0.65 pence level, above 0.65. We were looking for, and we are looking for, the 200-day moving average around 0.9. Best case scenario target here would be up to 1.4, maybe by the end of next month, something like that, if all things being well. Given that we do have a bullish divergence line in the RSI window, so that could provide some momentum for the shares over the near term. So it's something like that, but at least above 0.65, looking like a floor is in place for Katoro Gold. On to Omega Diagnostics, which I suppose maybe is the trading situation of the day at the moment. Here we had that bullish divergence line, which I talked about previously, so that's done the job today for the shares. Still in that falling wedge, and the level to beat now really for the bulls is 13 pence, which is the November resistance line. And obviously for the bears, hoping that the 13 will be the peak, and then we'll go back down towards the 7 pence level, which is currently the support line from last year. But at the moment, still favouring the bull idea, just on the basis of the bullish divergence there. So a flat line there versus the lower lows. And I suppose the difficult part there is how any placing would fit into the mix. But technically, we've got 13 pence as the big resistance number there at the moment. Onto a stock which has provided a roller coaster ride. Tintra, here we can see with it, charting rules have worked quite well. We had that line of resistance, which was the target around £1.50. We came back to test that this week, bounced off it quite well. Then the target was the top of the gap there at £2.39, which I think we've just filled today at £2.40. So that's working quite well. If you're looking for the shares to go higher, it would be an end of day close back above £2.39, back above the top of that gap, to then give the stock a chance of retesting £3.50. Otherwise, I suppose we're just between 150 and the 239 as the possible near-term trading range. Finishing off with a stock which has been battered a bit by the bears over the last year or two. What's interesting now is that we've got we had a one-day bear trap gap reversal for Verditech. And that might allow the shares now to head up towards the 50-day moving average at 3 pence, while we hold above the 2 pence area, or 2.1 pence area, which is the floor of the gap. So what's also interesting is the way the shares become as oversold as they have been any time, or more oversold than they have been any time in the last year, and possibly more. So possibility there of a rebound, at least near term, for Verditech at the moment, after breaking that line of resistance from November at 2.1 pence. That's it from me today. More updates tomorrow.